The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in. Merry Christmas, everybody. Happy holidays. It's Friday before Christmas. Markets closed on Monday, and then we come back for a 4-day week. Closed the following Monday for January 1st in observation as well. We got both holidays right now falling on a Sunday. So markets closed Monday, December 26th. Markets closed Monday, January 2nd. But we have a full day of trading today. And don't think it will be a dull one, folks, because yesterday, nothing in terms of dull at all. We traded yesterday from 39.20 down 130 plus points throughout the day, and quite a bounce, man. You talk about it on a Fibonacci basis. Just zooming in on the last 2 days' action, we got some economic data to go on, folks. So yeah, buckle up, folks. Where did we just trade to, folks? Man, I'm gonna change the name of this show to the 618 morning program, because we got 618s all over this market, folks. Where did we just go to? The 618 to the dot. Not sure how we got a pop on that economic number, but nonetheless we did, and it gave it up pretty quickly. And let's jump in before we do our entire wrap up, because this is an important one. And talk about really important data on the Friday before Christmas, 3-day weekend, when we got light markets. U.S. personal consumption, inflation cools, and the spending misses the forecast. So you have the personal consumption expenditures price index, excluding food and energy, which the chairman of the Federal Reserve, Jerome Powell, has stressed is a more accurate measure of where inflation is heading, rose 0.2% in November from a month earlier. That matched estimates, but you had the prior month revised higher for October. From a year earlier, the gauge was up 4.7%. That's down from 5% in October. Okay, so year over year, 4.7% in November, as opposed to 5% in October. The overall PCE, because the number I just gave you was core, the overall number increased 0.1% and was up 5.5% from a year ago, the lowest since October 2021, but still well above, to say the least, the central bank's 2% goal. Spending in here as well. Personal spending, adjusted for changes in prices. So this is adjusted for inflation, stalled in November, the weakest since July, and below forecasts. Chairman Powell enjoying his sip of coffee on that note. You got to slow down the economy to slow down inflation, folks. It's undeniable. An increase in services spending, led by restaurants and accommodation, offset a decline in outlays on merchandise. People still spending money on services, man. Merchandise, not so much the case. New vehicles were the leading contributor of that decrease. Vehicles, man. Yeah, quite a decline in terms of where vehicles are. Used vehicles. Carvana almost going BK. CarMax with some tough numbers yesterday. How about Tesla? We'll get into Tesla, man. Like the consumer price index figures released earlier this month, the figures point to a welcome retreat in price pressures, as they say on Bloomberg here, and suggest that the U.S. has passed peak inflation. They suggest it, man. Not sure that's going to be the case, but we'll see. Undeniable that we are getting some data reads that are dropping inflation a bit. What I will say is that even in the last 30 days, on an annualized basis, rates are still up 2.4%, and that is from a very, very lofty number. Yeah, you're getting a 0.2% month-over-month number. You annualize that and times it by 12, you're at 2.4%. I mean, the Fed would be throwing high fives around the room if we had a 2.4% year-over-year number. So if it continues that way, then yes, we are coming out of the woods. But nonetheless, we have a long way to go, man. Powell emphasized last week, substantially more evidence to have confidence that inflation is on a sustained downward path. He also said some pretty strong stuff about 2%, man. Not sure he really means it, but saying literally, we are not going to pause until we are sure that inflation is on its way back to 2%. Something to those likes is what he said. It's going to take so much to be sure it's going back to 2%. I'm not sure he really means that, because it's going to take so much. What is going to be happening to the economy if we get to 2.75%, if we get to 2.6% inflation? Is he really going to torpedo everything to get that last number from 2.6 to 2? That's kind of where the market is disagreeing here, okay? Yeah, so estimates were for 2.2% on the core number and a 0.1% gain in a inflation-adjusted spending. I'll get it out. The savings rate ticking up to 2.4% in November, the first increase since July. People saving a little bit more. Maybe they're a little bit worried about spending. But among the lowest readings on record still, right? People are getting stretched for cash, man. Inflation-adjusted outlays for merchandise dropped 0.6%, the worst since February. Spending on services still rising, and that is inflation-adjusted. Think about that. Spending on services rising, even adjusted for inflation. Spending on merchandise, no, negative action. Yeah, and the whole conversation, right, goes to, what are we talking about? We're talking about inflation. We're talking about 2023. We're talking about, yeah, maybe we're over the hump for inflation, but what's going to be the impact on the economy? Because we got a lot of lag, and we got a lot of interest rates to catch up on that lag, man, and we will see where we go from there. All right, back to the markets as we do a wraparound for some context of the volatility. Those numbers out at 8:30, I believe, this morning. And yeah, you see the chop around on this chart. We put it back on a 5-minute chart real quickly to see the volatility just this morning. Up to 38.70, just like that. We're back to 38.5, 38.45. That spike low on the number at 8:30 got us down to about 38.30. So you got all the markets slightly in the red. You do have the Russell slightly in the positive by less than half a point. You got crude. You talk about some volatility yesterday, man. Crude down to $77. We're right near $80 again on crude. You jump to gold. Man, it's just everywhere in this market, man. Gold, $18.30, trade down $35. Now gold, Fibonacci-wise, we're right near the 382, right? Yeah, look at that. Man, you got to love Fibonacci's, folks. The 382s are everywhere on the, the 618s are everywhere on this chart, but the 382s are everywhere too, man. And look at this. So not only right now are you bumping up to the 382 of this entire downtrend from March of this year down to 1618, but also on a very short-term time frame, just from yesterday's acceleration. What do? We catch a bounce to about 1807. Now, I'm going to jump back to the S&Ps real quick, okay? And you put the S&Ps on just a chart going back to when we got the CPI data on December 13th. We had the Fed, Chairman Powell comes out on December 14th at 2 o'clock. And that's when he started talking about, man, we're not budging until we're sure that we have gotten over the hump and inflation is on its way back to 2%. And literally, folks, if you believe that, I mean, can you imagine how much data we're going to need to be sure that the market's going back to 2%? We just went from 5 to 4.7. They're going to be easier moves right now. To move 0.3% is going to be easier going from 5 to 4.7. This is on the core PCE that we just got. Easier than it's going to be to go from like 2.6 to 2.3 annualized, right? And we're going 0.3 by a month. Imagine how many months it's going to take to be sure that we're going to be on the path to 2%. If you believe that, okay, then you better be ready for this market to be in trouble. Because if you believe the Fed's going to wait to be sure that it's going back to actually 2% and that they're not going to worry about something like a 2.4 or 2.6, then we are in store for a shock, folks. I'm going to pull up some Fibonacci's when we get back. I'm going to talk about a possible dead cat bounce in this market. It's Friday before Christmas. Don't go away, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P down about 5 points right now. NASDAQ 100 off about 17. We got the Dow off 8 points. We got the Russell right now, flat, we'll call it. I was talking about possible dead cat bounces. So number one, you back it up to the CPI data is on Tuesday, December 13th, okay? I talked about with our man Kevin Hincks yesterday, saying, maybe that's an irrational high. I'm not as comfortable taking a Fibonacci number off of that irrational high. And folks, it's an art, not a science. It's great when it pegs it to the penny. But I'm comfortable ballparking to some degree some of these Fibonacci numbers, okay? Because I don't know how they work, but I feel like they work to a certain degree. And when you get in those areas, right, to me, it's just a human reaction type deal. I mean, these numbers to me, Fibonacci numbers, are demonstrative of human thresholds, human reactions, emotions, fear, greed, right? At what point of a pullback do people become overridden with fear and decide to sell? Or maybe at what point in a pullback is the selling over? There's a lot of things that can go into it, right? So if you take that out of the equation and you just take where this market was coming into the Fed decision, that's not irrational, okay? People have the opportunity to get their chips in place, right? Make sure their wagers are where they want to be. You know a 2 o'clock deadline's coming up for a Fed decision, a 2:30 press conference to follow. So where that market is trading at 2 o'clock is real, as opposed to when you got a light market on a CPI number on a Tuesday morning and the market accelerates to 41.80, and by the time you reach noon, it gave up all of the pre-market gains. Not exactly as real, that number. And I'm just giving you my take on how those numbers play out, right? So if you take where this market was at about 2 o'clock as we came into the Fed decision, and I've got this up on an hourly basis right now, just going back, and you take this down to where we were pre-market this week, Tuesday, okay, and I'm going to take off this last Fibonacci number there to make things as clear as possible. I had sent out a letter, folks, on Monday. Now, I didn't quite get the Tuesday low. I took it off Monday when I sent it out, and just to my subscribers, Rocket Equities and Options. And, I say, listen, I think this market might be heading to 3,200, folks, and I don't know if it is, but you better be prepared that it might, okay? You don't want to deal with certainties in the market because no one can be certain. The way I try and approach things is think about the number of different possibilities that are in play, and then try and assign a probability to those possibilities taking place, and make sure that outlier occurrences are something that you can get over. As in, just if you assign a 1% probability to something, you assign a 3% probability to something, don't ever just go, that's not going to happen. That's a 3% chance. Folks, that's a 3% chance it's going to happen 1 out of 33 times. We got 31 days in a month. That means if you're doing something every single day that has a 3% chance, that's going to hit you 12 times a year. Are you going to be okay when that thing comes through? It's important to run those types of scenarios, right? So I sent out a letter, and it had the Fibonacci number here, and it said, this market just traded down from about 4,090 to 3,825. Okay, if we get a bounce in this market, you could get as high as 39.20, 39.27 almost. Now, the market moved down to a price level of nearing 3,800, and you got a 100-point leg, more than a 100-point leg, right? You got a leg from 38.03 up to a price point of 39.21, and all you did was trade up to a 382. That's like the stereotypical dead cat bounce, man. And what did you do? You gave it up in the span of like a few hours, which is just remarkable. But that's how this market's trading right now, man. So be careful across the board. We put it back on a daily, all right? And that's the Fibonacci number I was talking about. Now, going a little bit longer term, okay? I'm going to take this Fibonacci number off here. Going a little bit longer term, number one, the reason why 3,200 pops out. What am I talking about? 618s everywhere in this market, right? Wouldn't it make sense, man, that you bring back to a 618 and the entire move higher over COVID from about 2,200 to 4,800? With everything we're dealing with China, I'm going to bring up China. China's saying they got potentially 37 million people getting COVID every single day, man. That's a lot of people. That's going to put a hurt on their economy, at least in the near term. And here's the thing. China, they're going to be dealing with that. That's not going to go away in an instant. Okay, not going to happen. As in, yeah, they're going to get a bunch of natural immunity the first go around, but there are going to be more waves, man. It's going to happen. That is the scenario that we've seen play out in many different countries. It's probably going to play out in China as well, as they are just beginning the process of natural immunity over there. So don't think you get over this hump in 2 weeks and everybody gets COVID in China. It's going to be going through the more rural regions over there. It's not going to be as important as the cities where they just got everybody huddled up, living in dorms, making iPhones and Teslas, but it's still going to matter, and that's going to be persistent. And then you had inflation, you had everything going on, right? 3,200. So that's where it sticks out on the 618. We're going to take this, and just for some context here as well, you don't think it's possible? NASDAQ already hit that. And if the S&P gets to the 618, I don't know where the NASDAQ's going to be, man. Maybe the NASDAQ gives back all the gains back to a 618, which brings you the 786, which brings you to about 8,800, which is right back to the beginning of 2020. It would be remarkable, but there are a lot of remarkable things going on in this market, so don't put it past you as possible, folks. And that's the key, right? Is it likely? I'm not sure. Is it possible? Oh, you better believe it's possible. So back to the S&P. 3,200 sticks out on the 618. That's where the NASDAQ's already been, okay? Now, what's crazy here is, I keep jumping back and forth. The NASDAQ hit the 50% pullback, folks, by May 16th, okay? At that point, the S&P was already at 382. So no, it's like the NASDAQ has been one Fibonacci level away from where the S&P is, as in when the S&Ps were at a 382, you had the NASDAQ already at a 50%. Well, when the NASDAQ went to a 618, you had the S&Ps at a 50%. Well, what happens if the NASDAQ moves lower? And then the S&P moves lower. What's the next projection? Next projection is a 618 on the S&P and potentially 786 on the NASDAQ. They're dicey scenarios, but just make sure your chips are positioned, folks, where you can withstand that, because we have some pain coming at us, I think, man. And this is not a doom and gloom deal, okay? Year or two, we get over this hump, man. Things rebuild. Some price stability takes place. The Fed eases things with a cut, right? Real estate prices come back down. Maybe there's some easing of tensions between Russia and the Ukraine. Maybe China is over the hump, right? This is not doom and gloom like the financial crisis of 2008. It's not like the dot-com bubble of 2000, okay? But these are very serious concerns the market has not faced in some time. So that is the longer term. We take this off. Now we just zoom in on this year alone. I've talked about that each acceleration lower has been followed by a bear market rally that has brought it up to about the 618 or where we are. I'm just going to focus on the last trend here. Okay, from where we were on the highs of August 16th down to the lows, and I've chosen the low of about 3,600. You know, you could take the low of 3,500 if you wanted to. I really like this area that we had a lot of the bodies of the bars that were right along that 3,600 price point. That brings you right to the 618, folks, of about 4,000 in this market, 4,040. Now, yeah, the tail got all the way up to 4,180, all right? But I've talked about that tail. That could be irrational. And if this is an A to B leg, okay, you got an A to B leg that's about 600 to 700 points, depending on where you take that bar from 3,600 to 3,500. No, excuse me, 700 to 800 points, okay? 700 to 800 points. And where's that going to bring us, folks? We'll finish it up, but that's at about 3,300 to 3,200 range, right in the ballpark. All we got to do is an ABC. We'll be right back, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 7 points right now, trading at 38.43. All the markets kind of opening right near the pre-market lows, with the S&P off 6, NASDAQ 100 off 43, Dow off 43, and the Russell off by 10. So finishing that conversation real quick, just zooming in on the last acceleration lower. You know, we've all seen a million A to B, C to Ds in this market, folks. All we need is one more A to B, C to D, and it takes us down to a price level of nearing 3,300 to 3,200. Excuse me. The A point, about 4,300 on ballpark parking. The B point, about 3,600, okay? And keep in mind here that we're not taking the tail down to 3,500, so there's potential for this thing to be a potentially from 4,300 to 3,500 leg. That would make it 800 points, okay? Again, not a science, an art, so keep these possibilities out there. But let's just say you take what I have up here, 4,300 to 3,600. That's a 700-point leg from A to B. You get a B to C leg of a 618 that brings you up to about 4,000. And if you get the move lower, an A to B, C to D brings you down to 3,300 on the dot, folks. And as I said, that's not taking the extra 100 points lower. So you could see how 3,200 could be in the realm. And where does 3,200 bring you? 3,200 brings you to the 618 in the entire move higher from the COVID lows to about 4,800. It's something to process, because when they're all combining like that and they're pointing to a similar area and backing things up just during the accelerations we've had during COVID, we've had accelerations, folks, that are pretty dramatic, and this is the third time we've gotten a bounce. Shame on me. Do it once, shame on you. Do it twice, shame on me. Do it 3 times. I don't know. You better be ready, man. It happens 3 times. What are you doing? What are you waiting for if you think this thing doesn't have another leg down? We got the first bounce. I mean, how about that first bounce in March? How about the market at 46.31, man? Talk about out of the realm. Yeah, 46.31. Basically, the beginning of April. Well, 2 months later, the market was trading at 3,600. So, can't stress enough. We'll see what happens today, folks. I talked about it yesterday in the beginning of the program. Didn't think it was going to trade to 37.88. I said the market's going to be irrational. You got light players, light volatility in this market, light volume in this market. It's going to be even lighter today, but maybe we got all the fireworks out of the way yesterday. The only reason I say maybe we didn't is because we got some pretty important economic data out there yesterday, and maybe the momentum builds in either direction. And it's possible in either direction. That move to 3,200, it's not going to be a one-way move, man. Maybe it takes a few months or something like that. You saw the first move. They take a couple months is what's going on right now. Even the dead cat bounces. You get 2 months here, 2 months there, etc. We'll see where we go. All right, and you talk about dead cats. There's no bounce. Tesla, no bounce. How about Tesla yesterday, man? It doesn't stop. Now, you got car problems, okay? It's like the perfect storm right now going on at Tesla. And there was an investor yesterday on Bloomberg. I was listening to driving around the car for a few minutes yesterday, running an errand. And he made a great point saying, Elon's out there talking about the Fed and recession's already here and deflation. And he's hearing very smart people talking about shorting the market, et cetera. He's trying to blame the fact on the market is a huge impact on Tesla. And of course the market's a huge impact on Tesla. But what somebody said on Bloomberg yesterday was that if you just take the NASDAQ 100, and it was from some date in early October, okay? So let's just say it's like September 29th maybe, okay? September 30th. On my chart, you have September 30th or so, okay, folks? The NASDAQ 100 is flat. Since September 30th, growth stocks, the biggest stocks out there, the NASDAQ 100, of which Tesla used to be one of the biggest stocks out there, is basically flat from September 30th. There is September 30th on the Tesla chart, which is more than double. The stock is down about 55 to 60%, all because that's an individual stock problem on Tesla, okay? So don't get blindsided by one of the richest men in the world blaming the market for his company's problems. There is a big problem going on in Tesla, man. And, my dad's been talking about $60 and change potentially. I think he might be talking about this bar out here, 64.60. The biggest volume spike out there, February 3rd. This thing accelerates higher to 64.60. You dive to $23 during the COVID lows. You trade up to $414. And yeah, next stop is the 786, the 109. And the next stop after that's going to be that high, folks, of 64.60. And it might just be a one-way trip. Because did you think that Tesla would trade from 177 to 123 in 2 weeks when the market is not trading like that? It's just not stopping, man. And they have a brand problem now, okay? No matter what you think about Elon's politics, they now have a different brand problem because Elon has branched out to alienate people that disagree with him, and it's his right, man. It's any CEO's right, okay? But there are complications and implications and consequences. And his antics, folks, people who are big into, electric vehicles, there is a brand problem now with driving around a Tesla, and it's been exacerbated in a way that not many people imagined in the last 5 or 6 months. And it's a real deal, because I find myself saying, you know what, maybe it's time to start scaling into Tesla, because maybe even if it's going to 64, right? Well, you scale in at 120. If it gets to 90, you add a position. If it gets to 60, you add a position, and your average price is $90 and you hold it for the long term or something like that. So I'm having those conversations, as you should always be having those conversations. As an aside, as this market's rolling over negative, Tesla down 2%, S&P's now off 18. But things have changed. That's the most dicey scenario here. Tesla is not the new shiny kid on the block that's the coolest one out there. You drive a Tesla now, and you now bring the baggage of Elon Musk in your trunk everywhere you go with that Tesla sign. You may love him, you may hate him, but in terms of selling cars to everybody, that's kind of not what you want, I think, in my opinion. And so keep that one on your radar as well, because I think that's part of what's been factored in recently. Then you have, what do you have? Then you have China problems going on. And then you just have the car problems. I mean, we talked about the CPI numbers. One of the biggest drawdowns, okay, let's jump back to it. One of the biggest drawdowns, let me see if I can find it real quick. Oh, come on. All right, I'll find it during the break. But I said it. It was one of the biggest pullbacks was cars in terms of the hurt that it had on merchandise. Where are we? Here we go. I'll find it. Okay. Cars were one of the biggest drawdowns on merchandise, folks, because cars are getting hit in dramatic fashion. Boy, this market, be careful, man. That's not the drop-off you want, folks. And what did I say? Where do we trade to? Right? Ballparking. Let's take the longer-term one off. Basically touched a 618 on the dot. And that was almost 50 points higher than where we're at right now following that economic data. NASDAQ 100 off about 110 right now. We jump over to the big dogs. There's a drop-off for you. Apple off 1.7% right now, trading at $130. They have 16 billion shares, folks. On Wednesday, they were trading at almost 137. Today, they're trading at 130. That's a $7 drop, okay? That is $100 billion in market cap alone that Apple has lost since where it was trading at on Wednesday afternoon. We'll jump around, folks. We got a lot more to talk about. We'll check out some of the stocks that are moving. Stay tuned as we come back. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now negative by 5 points. Talk about a little volatility in the open, man. I'm going to put it on a 1 minute chart just to see the action we just got, man. That's a 1 minute chart. Up to 38.55, and then in 4 minutes, you trade down 30 S&P points, and then in the last 3 minutes, you have the market jumping 15 S&P points. So get ready for it, folks. We've seen it before on Christmas Eve, man. After this next break, I'll go back. What was it, 2018? You know what? Let's go back right now. Why not? A 5-year daily. We'll zoom in on the action. Where was it? There it is. That's the year. There it is. Christmas Eve, folks. Check out that acceleration, right? And what do we get? When we came back on December 26th, you finally got a reprieve. But look at this, okay? This is what can happen as everyone goes away for the holidays. I remember that day, man, because that was quite a move, because you had a 100-point move almost in an index that was only trading at 2,400. Yeah, that was a Fed pivot, man, and they took a while to pivot. And over the month of December, that market went from 2,800 down to 2,350. What is that? 450 points, almost a 20% decline for the month of December coming into that number. But I remember it, man, 100 points. So maybe this is a little exacerbated selling, right? We're going to find out when we come back, man. But don't think that things can't happen on Christmas Eve, because I remember that day in a big way. Yeah, we will see. We got a lot longer to go to pivot to get that type of a lift. Agreed, Duffy, for sure. Even with, those PCE numbers that we're getting today. All right, let's jump around to what else we have going on. Stock. So some of the news on Tesla, just to finish up the conversation about the man Elon. He said he's not going to sell any stock for 18 to 24 months. If you believe that, as Mr. Pesavento would say, I got a piece of the Brooklyn Bridge to sell you, man. He's not abided to that at all. Why would he not say that? Okay? You can be brilliant and you can be selfish and deluded at the same time, folks. He does not care if he's going to say something that he goes back on in 2 seconds. I see no reason why. Maybe he thinks it's finally under the price. Maybe he sold at a high enough price point. But that is an irrelevant fact to being an investor, because it means nothing, is what I would take that for. Okay? Meta, Facebook, they're agreeing to pay $725 million for a privacy class action lawsuit. That is basically nothing. Now, they've dropped pretty dramatically in terms of market value. But remember, folks, that company reaches about 3 billion people a day. And they have a privacy class action lawsuit that they're going to pay $725 million. What is that, a quarter? 25 cents for every person that's using their app on a monthly basis, just for some context of what you're talking about there. So take that for what it's worth. We got some upgrades out there. Not really anything to get into too much. Let's see. Mission Produce, the avocado producer. I am a huge fan of avocados, man. Avocados, very healthy fat. You get some good fiber in there as well. If you want to, I encourage you to eat some avocados. Lower than expected profit and revenue, as the rise in volume was not enough to offset a plunge in avocado prices. Yeah, they're down 13.7. Let's check them out. AVO, AVO is their symbol. Let's check out this chart. I haven't pulled this one up. I should keep my eye on these avocados, man. I was an avocado for Halloween a few years back, and I do. I love avocados, folks. $22 down to 11, up to 17. Let's see where we were. Made it to about a 50%, and you're challenging the lows right now for Mission Produce in their avocado sales. Let's see what they say. Where will we analyze? They engage in the farming, packaging, marketing, and distribution of avocados. Company produces avocados principally from California, Mexico, and Peru. 2 operating segments. Yeah, so they're all about the avocados. Oh, guac on toast, man, for breakfast. That's the best stuff around. Here's what else I'll say. We're going a little bit of a health diatribe for a second. In general, meat, right? There's a big deal to go vegan, to go vegetarian. Meat, especially red meat, in excess, is probably not healthy when you do it in excess. Anything you do in excess is not healthy, okay? But what I will say is at one point a couple years back, geez, we're going like 3 years back now at least, I decided, because I was eating so much meat, to just give my body a rest. And I went, first it was going to be vegan. No, excuse me. First, it was going to be vegetarian. And I said, you know what? I'm going to go completely vegan. Now, folks, man, if you haven't done it before, the difference between vegetarian and vegan is a world of difference because you're talking about milk and butter. And milk and butter is in just about everything if you go out to restaurants. You find that out when you start asking a server, what do you have that's vegan? Some restaurants didn't even know, which I found pretty surprising, that that's their entire job. They show up there on a daily basis. They work 40 to 50 hours a week, and they don't even know the question when there are so many people out there that are vegan these days, at least to say, do we have anything? Do we not? They didn't even know some of the people on their menu. But here was the key. I was unable for an extended period of time to eat healthy as a vegan because there's so much good stuff that you can eat that's vegan that is unhealthy in excess. So everything has its moderation. Everything has its excess. I mention it because guacamole on toast, man, boy, I could just eat that all day long. Guac on toast. I'd probably be 300 pounds by Tuesday, folks, okay? And that's kind of what was going on. I didn't have enough choices for myself, but it was good. I gave myself a break of about 4 to 5 weeks of straight out vegan, talking about no cream, no butter, no chicken, no burgers, no steak, no bacon. Love that bacon. But try and keep that in mind if you're trying to be healthy, because you can eat just about anything. You can eat, pounds and pounds and pounds and pounds of pasta and you'd be vegan. You can eat chips and salsa and chips and guac all day long, technically vegan. So it all kind of combines, and everything can be in excess. Oh, black bean soup, man. That's another one that gets me in trouble, man. That gets my dad in trouble. We love those black beans. Black beans. Oof, black bean soup. I can just do black bean dip, something like that, right? Again, I can get myself in trouble for that because it's just too delicious to splurge on. But nonetheless, we digress. Back to the markets as they trail off a bit with the S&Ps. Now down 21 points, back to a 5-minute chart. Are we challenging the lows? Pretty close right now. Yeah, this market at about 38.29. We were only as low as about 38.25. All right, let's check it out. We'll jump to some of the banks because they were higher. Wells Fargo, yeah, basically flat right now. I was jumping over Citi earlier, was positive. Yeah, Citi's up about 0.4%. How about that volatility on a bank yesterday from 45 down to 43, back to 44 today? We jumped to JP Morgan right now, down about 0.3%. Morgan Stanley down about 0.8%. There's a drop off for you. Let's check out how some of the airlines are doing. Yeah, not what you want to see, man, with that weather. Stay safe out there, folks. This is not weather to joke around with, especially out in the upper Midwest, man. Some of those temperatures. Even in Florida, folks. I'm by Lakeland, Florida. We're going to hit 31 degrees today and tomorrow for our lows. We might see temps in the 20s, and you're going to get some wind and snow up in the upper portions of the country that is amazing in terms of what you're talking about. But even in Florida, if we got enough rain, man, it could turn into snow because we have overnight lows right now on the weather forecast of almost in the 20s. So please be careful. That's a different kind of cold, man. Your car breaks down, you're stranded, you're in cold, you're in snow, your engine can't start. Be careful out there, folks. And I'm going to say it again at the end of the program. No drunk driving. Period. End of sentence. Train yourself. Tell yourself the holidays are too fun. Family is too important. Don't risk it. All right. Plan to make sure it doesn't happen, folks. Don't make that decision in the moment, because in the moment, you're not able to make that decision. We'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I'm pulling up some weather as we jump back to the markets. You got the S&P. We just got a little bit of a spike, man. That's a spike on a 5-minute basis. What? No, excuse me. Back it out. There we go. Yeah, down to 38.28. I had it into my chart zoomed in there, but sitting right near the lows, man. We blow through this. Watch out. Yesterday, we traded down 120 points from where we were pre-market, folks, so don't think it can't happen today with the markets rolling over. You get the NASDAQ 100 down a solid percent. We're right near those lows, within about 70, 80 points of that acceleration that we had yesterday. And we jump over to the weather. So check it out. Lakeland, Florida, 29 degrees you're talking about at night, man. We're not going to get any snow. Come on. Can't we get a little bit? Can't we get a little bit? Can't we get like a Christmas flurry for today or tomorrow or something like that? Let's see the hourly, what we're talking about. No, I don't want to buy anything. What are we doing here? The hourly, let's see what we're talking about. When are we going to get down there? Ooh-wee, man. Tomorrow morning at 8 in the morning, it's going to be 30 degrees where we are. And you're going to do it again the next morning, 30 degrees in Florida. That's staggering for Florida, folks. Yeah, staggering. All right, jumping around to some of the other headlines I had pulled up here. Yeah, talking about the storm, okay? First of all, you got airlines canceling thousands of flights as massive winter storm and bitter cold sweeps ahead. So that could impact the airlines. You're talking about FedEx and UPS. That was just flashing. Let's see how they're trading, man. That would be a bummer. higher prices, man. Even though they're not going to be able to deliver some Christmas packages potentially because of this last second storm that's rolling in. There's FedEx, up about 0.6. They had some big, strong earnings this week. And United Parcel Service, UPS, down about 0.7% with the market right now. What else we got up here? This one, to put the headline up there. China estimates COVID surge is infecting 37 million people a day, and I wouldn't believe anything that they're putting out there. So if they're telling you 37 million people, take it for what it's worth, because all they're doing is trying to sugarcoat things as best they can for their own interest, folks. But it's hitting that market, to say the least. All right. And, folks, please, check out the Tiger's Den, okay? We may be wrapping up early today. Not sure we'll get a full day of programming in. We're going to talk about that. Tom may be doing his program a little bit early today. We have some hosts out on the holiday. We're closed on Monday. We might be in the den, though. Check it out on the front page of TFNN. Merry Christmas, folks. No drunk driving out there. Be safe. Protect everybody. Thanks so much, folks. Have a great